Well, the Federal Reserve is holding interest rates steady as the central bank grapples with stubborn inflation.
The Fed citing economic uncertainty because of the war in Iran. On your side, Susan Campbell here with a closer look.
In what could be his final meeting as Federal Reserve Chair, Jerome Powell said what many expected.
The FOMC decided to leave our policy rate unchanged.
The Fed is keeping its benchmark interest rate steady at a range of 3.5 to 3.75%. Policymakers point to concerns over persistent, stubborn inflation, which hit a two-year high in March. Bankrate economist Stephen Cates.
Their credibility is in shambles right now. Can the Fed actually fight inflation? They're showing no indication that they're able to do so.
Cates warns inflation may worsen as the war in Iran drives up gas and other costs.
The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty.
CBS News business analyst Jill Schlesinger says keeping rates unchanged helps savers, but hurts borrowers.
We're seeing credit card interest rate, if you're carrying a balance, averaging over 19%. We're seeing people going out and trying to buy a $50,000 new car, and maybe they're paying 7, 8, 9%. If they've got shaky credit and they're trying to buy a used car to save money, those loans are coming in at 15, 16%. So borrowers continue to really be challenged.
Powell's set to be replaced when his term ends on May 15th. President Trump nominated Kevin Warsh to step in, leading to questions about the Fed's future moves.
He has said he leans towards lowering interest rates because he believes that AI will be a productivity enhancer. So we need to see whether or not that plays out.
With global tensions adding more pressure, for now the Fed is taking a wait-and-see approach. I'm on your side's Susan Campbell.